every portfolio company we have in North Africa has grown. So our healthcare business has grown 25% year on year. Our cake manufacturer in Tunisia has grown over 40% year on year. The IT services business was heavily reliant on government contracts. Given Arab Spring, they had to refocus more on commercial private sector contracts. They've still managed to grow to the point where they increased profitability significantly, but revenue growth was less than we had hoped for. But on average, every business had grown over 15% year on year in North Africa. I think what we're seeing in industries like FMCG and healthcare is that as the middle class is growing, and even as the less fortunate have more disposable income to spend, what you're finding is that they're spending more on healthcare. So one of our theses is to invest in the clinic and hospital segment and do a roll-up there, partly leveraging off of that. And the other one is seeking FMCG investments in North Africa to be able to leverage that growing disposable income trend. In addition to that, we're also looking at education, K-12 and university as well, because ultimately as there's more disposable income, as the middle class gets bigger and wealthier, they will want to send their kids to better schools, and so we're leveraging off that as well. In every sector there's a gem. I think the key thing is identifying that gem. Macro-wise, sure, healthcare is a defensive sector with limited volatility. You'll find that education is also interesting with good growth projections. I think in some sectors what you'll find is that the growth is more or less, but one thing we really like is fragmented sectors, because that's where you can essentially do a buy and build strategy and roll up businesses and grow much quicker than just having to rely on sector and market share growth. There are three differentiating factors, if I may sum up. I think the first one is that we have over 200 portfolio companies that we've invested in the past, various sectors. And so if I'm looking at a business in Egypt, there's not going to be a sector that we have not looked at before that we can pull the diverse experience of the firm to be able to leverage that knowledge, which obviously will impress the promoters that we are not just coming with money, we're actually coming with expertise because we've done it before. So it's nothing new. The second point is that we can help businesses in North Africa grow because we're not just a regional North Africa player, we're actually across the emerging market landscape. We have over 30 offices, so we have that access point. And we can help significantly in business development, and we have many examples of that. And I think that the third one is when it's time to seek an exit and the promoter wants to maximize value, we don't need to wait on investment banks to help us find a buyer, because we have such a deep network of relationships which reaches, whether it's in the GCC, whether it's in Southeast Asia or Latin America even, that we can leverage that to find potentially the best buyer for the businesses and maximize value for all. The investment strategy for 2014 is executing on what we've originated in 2013. We're very focused on sourcing FMCG transactions, especially in the food manufacturing sector. We will be looking at other areas, but I think all in all it should be a good year, very much focusing on execution of what we've originated, of the pipeline, and then sourcing for the future.